Good afternoon, everyone. It's coming up to 5 o'clock in the UK. That's midday in the US on Tuesday, the 30th of November. And the sell-off that we saw in the markets on Friday has continued with some vengeance today. So that little bit of a rally that we had yesterday is long since gone. And as you can see, the S&P down 80 points on the day. On both sides of the Atlantic, the VectorVest Market Timing signals saying exactly the same thing. They're all down. And as you can see on VectorVest US real time, we've got the short-term trend is down, the underlying trend is down, and we've had a confirmed down in place for quite a long time. That confirmed down has been in place since the 22nd, so well over a week of warning that this market was falling. So if we have a look in detail at the buy-sell ratio, we can see the buy-sell ratio has moved down into a mega oversold situation at 0.22. The MTI is getting down into a mega oversold situation at 0.71. Nevertheless, it's far too early to even consider doing anything, folks. And I think your prime consideration at the moment should be capital preservation. Let's have a look at the VectorVest Composite itself. Here we are. There's the VectorVest Composite. And folks, just remember to have this in context that we're still above the October low. And clearly there's a huge line in the sand that's been running here for a long time around these levels on the VectorVest Composite. I would be surprised if this market was bid before that. So I think we'll probably have, even under the most bullish circumstances, we'll have another couple of days of downside here. But nevertheless, we are moving into at least a short-term mega oversold situation where we could quite easily have a bounce. The VectorVest Market Timing signals will tell us that. At the moment, far too early to do anything. I've cut all my US positions. I made some money on Home Depot. I made some money on Builders. I did well on Nvidia, but I got stopped out for a loss on HDI, I think it's called. So I haven't got any US positions running on the long side at the moment. So nothing to do but watch stop losses. I haven't got a long-term portfolio in the US. I just use the US market for some short-term swing trading, so those are all flat. I'm completely flat in the American market. I have a long-term position portfolio in the UK market, and I base those stops on an end-of-day basis, and I haven't been stopped out of anything as yet. I got stopped out of one share last week, a share called Volex, but apart from that, all the positions are running. I shall see at the end of the day. The London market is well off as well. So this could be classed as a healthy correction. And as you probably have found out by now, these healthy corrections seem far from healthy when you're actually working through them or going through them. But I would suspect we have a little bit more pain to go. That's the S&P 500. And again, I would be surprised if anybody bid the darn thing before it gets to that old top. S&P 500 much more resilient. And the top 500 shares haven't pulled back nearly as much, and as you can see, well above that October low. Again, the broader market getting hit much harder. On the S&P 500, the stochastic is getting down into the oversold area, and that's had a good track record of producing turnaround. So let's watch your stop losses very carefully on both sides of the pond. Nothing to do as yet. I would suspect we have a couple more days pain to go before we see any bounce. Whether it's a bounce or a resumption of the bull market, I really don't know. And clearly the thing that's driving this is this brand new variant of COVID-19 that scared the pants off everybody. The reason I think the market sold off in Europe this morning and on the S&P 5 futures was that the CEO of Moderna stood up and he cast doubts on whether the vaccine would be effective, his vaccine or the present vaccines would be effective with the new variant. I'm no virologist. All I know is that on this pullback, if we go back to the VectorVest composite, confirmed down signals need to be taken very seriously, folks. We don't know, is it a small little pullback like these ones we saw last September and November, and these ones here that pretty much came to nothing, or are we a situation where we've got a February 2020 type drop ahead of us? Market's come an awful long way since March. It could certainly pull back quite a bit, and the trend would still be up. It could pull back easily to this old top, and we would still be in a bull market. So and that would cause a great deal of distress to portfolios. I don't have to remind you folks that if you take a 50% hit, then you need to make 100% just to get back to square one. So don't allow that to happen to you. Manage risk aggressively, and in this environment, don't hesitate to protect your capital. I'll do another couple of videos during the course of the week if I see any sign of a bounce on the indices. Thanks very much indeed. I wish I had something more positive to say to you. Bye-bye.